Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first, I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment, from a structure perspective, the market is testing a quite strong monthly support and demand area. In fact, from here, all this previous rejection to the upside was created, then the market broke below that zone, creating this low here. Then we had the break back above, and this previous support became once again support, and the market is in fact currently testing it and has already started rejecting it to the upside. So in a situation like this, more bullish price action could be expected. Now, if we look at what kind of pattern the market is currently creating, we can easily identify an inverted head and shoulders, with the left shoulder here, the head here, and the right shoulder being created at this level, from which, once again, more bullish price action could be expected. We can also notice that as we have an impulse and correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg, and this shows us how we have a 0.618 Fibonacci retracement lining up exactly with this previous level of support, therefore creating a confluence of support and demand that the market should reject to the upside. And instead of a confluence of support area, you would expect to see institutional longing, and that is something that we will be seeing in just a few minutes when we move to the order flow for EURUSD. So since we have institutional longing, that is an increased probability of getting a rejection higher. Now, dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, the structure is very clear as well. This zone, in fact, was acting as previous resistance here, turned support here, again acting as support here, and now that the market has just tested it, it is once again acting as support, and the market is rejecting it to the upside, which is exactly what you would expect in a situation like this. Dropping down on the daily time frame, what do we have? Well, from a daily standpoint, we can notice that just now we had the confirmed break above daily structure, shifting this market from a daily bearish market to now a daily bullish market. In fact, clearly we were seeing here the creation of lower lows and lower highs. Now we just had the creation of a new higher high with the break above this previous high. Now, as the market has broken this level, this means that now this is the establishment of a new uptrend. And this previous level of resistance, so this previous high, is now become support, because what we know is that in the market, previous resistance, once it gets broken to the upside, it becomes support. So what we could expect in a situation like this is to see a potential retest of the previous resistance turn support, and then we could see a rejection to the upside away from this area. This is definitely a possibility. However, if we go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing, and we check the data exactly for the euro, we see that institutional longing has not started yet. In fact, what we can notice is that net positions with the last reports have actually been decreased. We went from having 74.4k to 31.1k net positions. And keep in mind that if we're checking the data for the euro, we're actually already looking at EURUSD, because all currencies on the spot are traded against the USD. So institutions with the last reports have decreased their positioning on the EURUSD, which anyway was in fact trending lower. So that makes perfectly sense. However, we still don't have the new report. It's coming out in just about 2 days. And if we see with the new report that this push to the upside was fueled by institutional longing, so if with the new report net positions start once again to get increased, that is where things get very interesting, because at that point, on the retest of this previous resistance turn support, that is where we have the possibility of getting even more institutional longing, which at that point would further increase the probabilities of a potential push higher away from this level. So this is definitely something to look at if the net positions with the new report will be increased. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and in the description, so you never miss new updates. Now, back to the analysis. So in a situation like this, if the market will retest this level and net positions will start increasing, so we will start to see institutional longing, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential push higher away from this level. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.